today we're going to talk about the three main components that's going to help you to be able to get $100,000 in the next 60 days. The main three things that you got to work on when you're trying to get in position to get $100,000 for your business is your personal credit profile, your business profile, and then your funding sequence. If you have those three things, you'll be well on your way to getting $100,000 in the next 60 days for your business. What is up, family? My name is Richard Guilbeau. If this is your first time seeing me, I'm a serial entrepreneur. I own multiple six-figure businesses and a seven-figure company as well. I teach people how to start and grow credit repair companies. I also teach people how to scale their businesses to $500,000 a year or more. And I want to tell you real quick how to get funding, because I've been doing funding for the past few years as well. And I've noticed there's a lot of people online who's talking about funding nowadays. The thing is, for me, that a lot of people are teaching funding. They don't really teach you how to grow a successful business. So I want you to think about this. If you are able to go and get funding right now to grow a business, how is that going to benefit you? First, you might think if I get more money, I can make more money. But if you don't know how to make money without money, you won't be able to know how to make money with money. So you got to learn how to grow and scale a successful business first. So when I say personal credit profile, I mean you really want to have a really strong personal credit profile. Now, when I say personal credit, that's a lot of different things that go into personal credit. The one is going to be like, how many accounts do you have? You have to have a certain amount of accounts on your credit in order for your profile to really seem like it's strong. If you have a little bit of accounts and you have a very high score like a 700, 800, you still can get denied because your profile is thin. So I actually see a lot of people who are saying, like, on my ads, because we run ads because we do funding for a lot of people. So when I see a lot of people posting on my ad and they're like, yeah, I got a 700, I can do it or they say, if I had a 700, I can do it myself. First of all, you don't have a 700, so you don't know that for sure. And if you did have a 700, you don't know how to get the funding because you've never done it before. But I've been able to do funding. I've been doing funding since 2018, and I've seen a lot of different businesses come and go who think they can get funding and they can't. And it comes down to these main three things: the personal credit profile, the business profile, and the funding sequence. So like I mentioned, you want to have enough accounts on your credit. So really 8 to 10 accounts on your credit is really what I would personally say is the minimum amount of accounts that you want to have. So if you don't have enough accounts on your credit, you really need to add more positive accounts. But there's a certain way that you do that, because when you start adding accounts to your credit, you can actually stop yourself from getting funding because you get too many brand new accounts. So what you want to do is start adding accounts that actually have age onto them. And no, I'm not talking about authorized users, although authorized users can be good depending on which type of funding you're trying to do. So authorized users will be good for personal funding, but not for business funding. So what you really want to do is add aged primary accounts. I'm not talking about zombie debt. I mean actual accounts that's your personal primary accounts that you can add that have age onto them. A couple of them are going to be like Rental Karma and Rent Reporters. I still personally use those two accounts on my credit, and I probably had those for like 8 years, but they can open up as 5-year-old accounts on your credit. So you can get this account, you can get 2 of these accounts today. They will report rent to the bureaus, and you don't even have to actually live at the place. You could be paying rent or giving somebody money every now and then. You could have stuff at their house or whatever it is. They just need to say, and you pay them money, so they just need to say that you paid your rent this month. If they can do that, they will report that on your credit as a positive account, and they can say that you've been there for the last 5 years paying this much money per month. So that's going to look really good on your profile. So you really have to be very careful when you're adding positive accounts, because those could stop you from getting funding. So if you need a list of positive accounts, all you need to do is look in the description. I have a link that you can go to that's going to show you which positive accounts you should add to your credit, but you still should do like a consultation with the team to make sure that you're adding the right accounts, because you might not need to add any, and then you might need to add some, but then you might only need to add a few. So there's a lot of different things that go into funding. I really would prefer you talk to my team or somebody that's a professional who knows what they're doing and has been doing it for years, to make sure that you're not going to put yourself in a bad situation. If you go and you add accounts to your credit that are not the right type of accounts, you can really push yourself back 6 months from being able to get funding. And a lot of times people have high utilization on their credit, and the strategy to fix the high utilization issue is not to go and get trade lines. When you go and get trade lines to fix your utilization issue, all you do is make your profile look a little weird, because you have accounts that's fully maxed out or that have very high limits, and then you have an authorized user that's really not your own card, you're not your own account, that's on your credit, showing that somebody else is being responsible. You just get the credit for it. So they still will look at your account and say you have scattered revolving debt. So we have a lot of clients who will come back, we'll tell them like, hey, you have high utilization, you have too many accounts with a balance on it, you're probably not going to be able to get funding. If you want, we can still try, but you probably won't be able to do something. You probably won't be able to get anything. And then when they try, they actually get denied. And one of the denial reasons is scattered revolving debt. I really like people to go through the process with us sometimes because I need them to understand this. You know, I can tell them, and the team tells them over and over and over again, like, you have to pay this stuff down. If you don't pay it down, they're going to deny you, or you're going to get lower limits. So the utilization when you're doing funding should be between 0 and 10%. Well, actually between 2 and 10%, because there are some banks that actually want you to have a balance on your credit cards, but not a very high balance, between 2 and 10%. Anything over 10, for me, I would consider like it's okay. 10 to 30 is like, you know, it's okay, but you really want to be between 2 and 10% when you're trying to go and get funding. Anything over 30, I would definitely not recommend you doing the funding. At that point, we would have to do a different strategy to get you to pay down those credit cards so we can get you funding to pay down those cards. And then you can come back. Once the cards are paid down, then we can go back and get business funding after that. Once the utilization is down. Utilization goes down, scores go up, profile looks better, then we go and run to get the funding. So let's say we have the appropriate amount of accounts on your credit, the 8 to 10 accounts, you have a low utilization. How many personal cards do you have? That's going to be the next question. Do you have 1 or do you have 5? You know, so, and then once we figure out how many cards you have, if you have any, what type of cards are they? Are they actual cards with like Chase, Wells Fargo, BOA, or are they like JCPenney's? Because the type of card you have also matters when you're trying to get funding. There are such things as like tier 1, tier 2, tier 3, and tier 4 kind of credit cards. So you really want to have cards that are with major banks and credit unions and lenders for them to really consider it like a legitimate line or trade line on your personal credit. Or you really want to have an account from like a main bank or main credit union or lender on your profile that's going to make them feel like you have a more legitimate account on your credit. And then let's say you have 2 of those credit cards. What's the age on them? Then that's the next thing. There's so many little things that go into funding, and that's the reason why people are not getting approved. But I'm going to tell you everything that you need to have in this video. So the next thing is going to be, let's say you have 2 credit cards, at least 2 credit cards. What's the age on them? You want the ages on those to be at least 2 years old. You can get away with having a 1-year-old or maybe even a 6-month-old card, but you really want to have at least a two-year-old credit cards. And then what's the limit look like? In the next step, what does your limits look like on those cards? Do you have 2 cards that are $300 each? Do you have a $100 card? Because whatever your personal limits are when you're trying to do business funding, they're going to kind of match or be around what your personal limits are on your business accounts, your business approvals. So are your cards $100, $200, $300? Because if so, you're probably going to get denied. What you need to do at that point is then we need to go and do personal funding. We need to go and get you a lot of high limit personal credit cards. Then you're going to have to let those age. You can use those. You can get the points. You can do whatever you need to do with them in the meantime, but you have to let those get some age on them first. At least, I would say at least 1 year, and then you can go back and get funding. So this is not an overnight process for a lot of people. For some people, if you come and you're ready to go, we can get you like up to $250K within 2 weeks. But for other people, sometimes this is going to be a steps. There's going to be strategy. And we're only talking about the personal side right now. We haven't even gotten to the business profile or the funding sequence. But I want you to kind of understand what we look at people's profiles to try to get them funding. So to kind of reiterate real quick, you want to have 8 to 10 accounts on your credit. You want to have at least 2 personal credit cards that have at least a $2,000 limit on each one of them. And you want them to be with major lenders or major credit unions. Then you also want your utilization to be between 2 and 10%. So the next thing is that it also helps if you have auto loans. If you have auto loans, if you have installment loans, if you have mortgage, all of those things help whenever you're trying to get funding because you have different types of debt. And credit mix is actually a part, I believe it's 10% of what your overall credit score is. So the credit mix is just what type of accounts do you have? Can you manage different types of debt? That makes you look a lot more responsible when you're trying to go and get funding. If you only have 20 secured credit cards at $200 each, they're going to say you probably can only manage $200 and this is your money, so you have to manage it properly. What are you going to do when someone else gives you $10,000? The bank is going to be like, we're not going to be the first one to give you $10K for you to mess over us. You have to structure that profile a certain way, and that's where the trade lines are going to come in handy. Like I mentioned earlier, when you're trying to go and get personal funding, then you can add trade lines onto your credit. You can add 10-year, 20-year-old, $10,000, $20,000 trade lines to your personal profile, and that's going to help you to get high limit personal credit cards. The reason why we get into high limit personals is because when we go for funding on the business side, you're going to have high limit personal cards, so they will give you high limit business cards as well. So that's the only way that I would really say use a trade line, unless you're looking to get a home or you're looking to get a car or whatever it is, and you just need to get your scores up. Otherwise, I would really say you want to stay away from trade lines. I mean, it's not that they're bad, you just don't really need them if you structure your profile properly. And then when you get trade lines, I would say you really at the max only want to get like 2 of them, because you don't want people to look at your credit and say you have 5 different trade lines. So your credit scores might only be propped up and they might only be high because of those trade lines on your credit. You want them to look at your credit and say you as a person look responsible, not you as a person look like you're using other people's debt to make yourself look responsible. So I hope that makes sense. So let's move on to the business profile. Now this part is super important as well. There's 3, like I mentioned, there's 3 main parts, and each one of these parts is super crucial. Any one of these done incorrectly will definitely get you either very low approvals or they will get you just fully denied. So now that we've talked about how to get a strong personal credit profile, let's talk about how to build your business structure, how your business is structured. So now that we talked about getting your personal credit in line, let's talk about how we get your business situated for funding. So there's a lot of different things that go into structuring your business properly for funding. First, you want to make sure you actually have an LLC or a corporation. You don't want to come to the bank with a DBA or with a sole prop or something like that. You want to make sure you actually have a legal entity with the Secretary of State. So when the bank looks your business up, they can actually find it on the Secretary of State's website. And then when you're trying to go and get funding, it's kind of hard to get funding for brand new businesses. The reason being is because when you're filling out the application, they want to know how much money did you make. You can project a certain amount of money, but how do you know that you're going to be able to get that money if you've only been in business for 1 month or if you've only been in business for 3 days? Everyone has those super big dreams, those super big goals when they're starting a business. Does not mean that they can reach them. And statistically shows 8 out of 10 businesses actually fail within the first 2 years of business. So you being a 1-month-old, 2-month-old business, saying that you're going to make $500,000 a year kind of looks skeptical, kind of makes them feel skeptical about you. So after you make sure you have a legal entity, you also want to make sure that your business name is not in a high risk industry. If you're doing trucking, you do not want to say 123 Trucking Company, 123 Trucking LLC, or I do trucking. Trucking is in a high risk industry. So you want to make sure that your business name does not classify you as high risk, because when you're doing funding, if you're considered a high risk company, they're either going to deny you or give you lower approvals. To give you an understanding of what I mean, I went to a bank one time and I was working directly with the relationship manager. The relationship manager put my application in for a line of credit. Now, when she did that, she put that my business did real estate. She said she was trying to help me to get approvals. That relationship manager does not do funding for herself, nor has she probably done funding for a lot of other clients. Her saying that I was doing real estate or looking to do real estate with it actually got me denied for the line of credit. My business name was Rich Properties and Holdings. It is borderline bad. It is borderline high risk, but I know how to set up my NAICS code and my SIC codes so that I don't look high risk. But she told them that I was looking to do real estate, so they denied me for a line of credit and approved me for a $50K loan, which I didn't take because I didn't want a loan. But being in a high risk industry got me denied. Even though I know how to do funding, I've been doing funding for years. My personal credit profile is strong, business set up properly. She put the wrong thing on the application trying to help me out. So make sure that you're not in a high risk industry. If you don't know what a high risk industry is, you definitely need to tap into the business structure course that I have. All you need to do to get access to that business structure course is to click the link in the description. It's going to say business structure course, and there's going to be a link right under it. You can get access to it, and it'll tell you every single step that you need to go through in order to structure your business properly. It's going to go over the business name, those high risk industries, the EIN, the Google My Business. I'm going to go through and I'll screen share and show you exactly how to set up a lot of these things. Make sure you have your EIN set up properly. Make sure all your names and addresses are 100% the same, because having 123 Main Street with STREET and having 123 Main Street with ST period is actually a red flag. Those things can actually stop you from building business credit as well. So you want to make sure that everything is set up properly, so whenever you're trying to go and get funding, there's no hiccups. They can clearly see that you are professional. They can look at the paperwork without even talking to you and say, this person looks like they have their stuff together. And that's how you want to look. You want to have a business email, no blunt blowing at Hotmail, .com, no Gmails. You want to have a professional email, and you can just get that from GoDaddy. You can have a website as well that you can get from GoDaddy. You just need to have a one-page website. It just needs to kind of plainly say what it is that you do, and which hopefully, hint, hint, is going to be consulting. Your NAICS code is going to be 541611. Or 541614. Those are two good consulting NAICS codes that you can use for your business. And when you think about it, everybody does consulting. If you're doing a trucking company and I say, hey, how do I start doing trucking? And you start telling me what to do, now you're consulting me. So I would prefer you to say that you're doing consulting, even though your other main stream of income is going to be something else. Because whatever that other thing is, Mr. Real Estate Investor or Trucker, that's going to get you denied, or it's going to get you very low limits. So instead, just kind of say that you're doing consulting. You're not lying. It's just one of the things that you do. So after you make sure all of your information is correct, you also want to get your DUNS number. That's 100% free. Your EIN number is 100% free. Don't be like me. I actually paid $175 for my first EIN number. Lack of experience, didn't know what I was doing, went to the wrong website, and I got charged for an EIN number that's actually 100% free on irs.gov. So you want to make sure that you kind of pay attention to what you're doing. The only place that you're going to actually have to pay when setting your business up is going to be your email, your website, your entity with the Secretary of State, your phone numbers, your address, things like that. Those are the only things that's really going to cost you. Your EIN is going to be free. Some of the other things are going to be free. And you also want to make sure that you have a strong and proper business address. You never want to use a home address. So most people, when I say you can't use a home address, in their mind, the first thing they go to is a P.O. box. That's 100% wrong as well. You do not want to use a P.O. box. That's going to get you denied like 99.9% of the time, because most fraudulent businesses use a P.O. box. Why would they want to send money to a person where they don't even know where you actually do business at? Instead, you want to have a commercial address. And no, you don't have to go and pay thousands and thousands of dollars a month. I have my offices are called a virtual office. You can go in there, you can use the office, you can get an 800 number, which is something that you actually need for your business. You can get a fax number, you can get all of that with a virtual office. And the one that I use is going to be in the description below. It's going to say virtual office, and it's going to be linked right under it. It's the same virtual office that I use for all of my companies. And I have offices in Florida, Pennsylvania, Texas, and Louisiana. And if I need to, at any time, I can go to any one of those offices and use those offices for like a meeting or whatever I want to use them for. Even though it's not the cheapest virtual office out there, it is the one that I found to be the most consistent, because I've been to another bank for another experience. So I've been to another bank in Florida, and the banker that I was sitting down with was looking over my information. When they're sitting down, when you're talking to them on that side of the desk and they're just typing things away on their computer, they're probably looking you up. So when I was sitting down talking with the banker, he was looking up the business, and he said, oh, this is a virtual office, right? The answer was yes. A lot of banks and lenders do not like virtual offices. So needless to say, I got denied over there because I was using a different virtual office. So I would never use another virtual office, although there are a lot of cheaper ones out there. A lot of people recommend different ones. I just prefer to stay with my guys because my guys have never let me down. So if you need a virtual office, it's only $109 a month for the 800 number, the fax number, the office number, a secretary to answer the phone, and you get to use the office, and you can collect mail over there, and they can ship the mail over to you. And that's only $109 a month. So click the link in the description. It's going to say virtual office, and there's going to be a link right under it. I'm going to make everything super, super simple for you. So after you have the right business name, you have the EIN, you have your address, you have your phone numbers, you have your website, you have your email. You also want to do a Google My Business, which I'm going to show you how to do that in the business structure course. I'll show you exactly how to do that. It's all on Google. It's free. You set it up on there. They're going to send you a code. You just send that code back to them, and now you're going to be able to Google your business. So anytime you go to the bank and they say 123 LLC and they Google it, your business is going to pop up right there. There's no way for them to feel like this person might be skeptical because you're on Google. You're the first thing that pops up on Google. That's going to make you look a lot more professional. So after we've structured a business, then we have to focus on the funding sequence. I would not say you want to focus on the funding sequence before you set the personal and the business profile up. You have to set those two things up first, because it doesn't matter what type of funding sequence you do. If you are able to get any type of money, you're probably going to get very low limits, or you're going to get a lot of denials. And at that point, you're going to get denials. You're going to get new inquiries on your credit. You got to wait time to get those inquiries off. Then you got to try to go and do it again. And then you have to go back and reset everything up the right way in the first place. And then you're gonna have to go back and set everything up right like you should have done in the first place. So now it comes to the funding sequence. So there are a lot of different things that go into the funding sequence part as well. After your personal profile is set up properly, your business profile is set up properly, now we need to figure out which banks are in your area. So you want to find, you can go to bankbranchlocator.com. You can see which banks and which lenders are in your area, and you can kind of put together a funding sequence. Now, the way you want to do that is really by credit bureau. Some banks only pull one bureau, some banks pull two. You need to know which banks pull one bureau and which banks pull two, and which bureaus they pull, because that's how you're gonna that's how you're gonna set up your sequence. The next thing is gonna be understanding that Chase is gonna pull two bureaus now. They're gonna pull Experian, and they're probably gonna pull your TransUnion, depending on which area you're in. In some states, they're gonna pull one bureau. In other states, they might pull a different one. Some credit unions are like that. In one state, they might pull Equifax. In another state, they might pull Experian. So the only way you're gonna figure that out is by calling. Now, the issue is that a lot of times when you get somebody on the phone, you're probably gonna know more about their products than they will. They're probably not gonna know which bureau they pull because they don't handle that. They don't go do funding, they don't get funding, so they probably don't know which bureau they pull. A lot of times I see that happen. So what I normally do is I will call 3 or 4 branches in that same city and ask them the same question. If 4 out of 5 say they're gonna pull Equifax, then I'm gonna kind of put in my mind that they can pull Equifax. The other thing that you can do is go to creditboards.com. On Creditboards, it's gonna show you which state people are in, which card they got approved for, and which bureau they pull, how much money they got approved for. So you can go and look on there and see what kind of approvals people are getting, at which bank they're going to, and which bureau they're pulling, and you can kind of figure out your sequence from there. Now, I would always say you really want to go with Chase first, because Chase really cares about inquiries. So when you go to Chase third down the line, you're probably going to get denied because you have too many inquiries. So I would always go to Chase first. I would go to pre-approval accounts first, or pre-approval credit unions. So those pre-approval credit unions are going to be places that's going to give you an approval with just doing a soft pull on your credit. No hard inquiry, soft inquiry, you can get an approval. And then after you get the approval, with some places you can actually lock the bureaus and then fully finish the application. So you get the approval, you get no inquiry, unlock your bureaus, and then you go and get more funding right after that. But the funding sequence is super, super important. So if you go, like I mentioned, if you go to Chase first and because you want American Express, you can get American Express and then you'll miss out on Chase. Me personally, I have $100,000 with Chase and a couple credit cards. So I would always recommend going with Chase first because they're a really good resource. I have like 3 platinum cards, 3 gold cards with Amex. But what I've learned about Amex is that they don't really care about inquiries. So you can actually do all of your funding first and then do Amex last and still get approved for Amex. But you have to understand that funding sequence. You can't just go to all banks at the same time and think that it's going to be okay. You can go to 3 banks that pull each bureau. So I would go to 3 banks that pull TransUnion, 3 that pull Equifax, 3 that pull Experian. Now, understanding that Chase is going to pull your Experian and your TransUnion, so you got 1 bank gone by using Chase. Never use Capital One. Capital One is always going to report to your personal credit profile. The reason why you're going to get business funding is so it doesn't mess with your utilization. But when you get Chase or you get Discover, those cards actually report to your personal profile as well. That's going to raise your utilization, it's going to lower your scores, and you're not going to be able to get more funding. So if you're going to do Chase and Discover, I would save those to the very end of doing funding. After you get as much funding as you possibly can and you're not really looking to get more for a while, then I would maybe consider getting Capital One or Discover. Otherwise, I would never deal with them. And I personally don't even have those myself. So I've given you 2 resources that you can use to go and kind of create your funding sequence. And one is going to be bankbranchlocator.com. The other is going to be creditboards.com. And like I mentioned, you can always call those banks. So once you go to bankbranchlocator.com, you put in your zip code or you put in your city, you find which banks are in your area, and then you call them. Or you can check on their website. You can see if they have 0% interest credit cards. You can see how long those limits are for. And then once you find those limits and find those banks, you can go on credit boards and then see who has been approved for those banks, which bureau they pull, how much money they got, what their credit score was. So you can kind of gauge and see, okay, if my score is a 750 like this, like these other 10 people who got $10,000, maybe I can get about $10,000 as well. And you can kind of really formulate your strategy. And then from there, if you go and get $10,000 to $12,000 per credit card that you get, and you go to 9 different banks, you're going to get $100,000. All you need to do first is make sure your personal credit is set up properly. Then you need to make sure your business is structured properly. And then you need to have the proper funding sequence. If you have those 3 things, you'll be well on your way to getting $100,000 in the next 60 days for your business. So if you like this type of content, like, share, and subscribe to this video. Check out the Facebook group. The link is going to be in the description. I'll see you on the inside.